Hello and welcome to this panel session from the 10th Practical Nigerian Content, organized by the Nigerian Content Development and Monitoring Board. I'm Ehi-Omoike. Panelists in this session explored how indigenous businesses in the oil and gas industry can access finance. Stakeholders from development financial institutions like the Bank of Industry, the Nigerian Export-Import Bank, Africa Energy Investment Commission, and the NCDMB shared invaluable insights. As small companies tap into the energy transition, how can these companies have better access to long-term facilities and funding? These were part of the questions answered at this session. Let's listen to the proceedings.
What we're here to talk about this afternoon is access to funding. There are some suggestions, even from the poll that was undertaken earlier during this program, that this is not central to what we are talking about during this conference, which is local content. But the fact that the NCDMB is spending so much time, energy, and committing resources to the question of funding suggests that it is not peripheral, but it is actually front and center. I'd like to start, if I may, with the first question of the issue of challenges of raising financing and investment in the Nigerian oil industry.
The oil and gas industry has been plagued with a lot of issues, varying from skills, technological advancement, and then from the fact that IOCs seem to have an edge in the financing space, because we're looking at indigenous companies getting access to finances and money for investment. This has largely led to a reduced performance and has also driven away credible investors. The challenges that have for a while plagued the oil and gas industry. I'll quickly run through some of the challenges that are prevalent, what we're looking at as the way forward, how we could come out of it reasonably, and what next. I'll start with the first challenge, and I'll call that unstable oil prices. This was particularly prevalent during the time of COVID, where oil prices dropped to an all-time low of about $7. Right now, it's vacillating between 73.54, 74. I've not checked this morning. But in an era whereby really one can't predict or prescribe how much returns is going to come back in, it's difficult to invest, and it scares away credible investors. I recall at the peak of the COVID, when the COVID newly hit, IOCs went on to renegotiate contracts much lower. And so banks that had already given facilities based on the repayment sources being those contracts had issues looking at those same facilities. Some might have gone bad. Thankfully, NCDMB gave a palliative on their funds, so that kind of eased the pressure from customers who are taking loans from the fund. But how about customers who took loans from commercial banks or took loans offshore? Now that's one of the challenges, the unstable oil prices. The next is the policy uncertainty. The Petroleum Industry Act spent over a decade before it could be passed, and it was a great challenge. Even now that it has been passed, there are still two thorny areas that are still begging for resolution. One of them is the host community fund. The Host Community Development Fund, which is 3%. Senate had picked 3%. The House of Rep had recommended 5%. It's been argued that a 4% middle way position might be an easier position or an easier place to stand on. The next is the 30% Frontier Exploration Fund that we're all aware of. Its applicability, how it's going to be implemented, it's a challenge. That political uncertainty, the policy uncertainty is still there. If things like this can be taken care of, it will give a better business environment, a better perception of how our business environment runs, and give investors more confidence to come into this space to invest. And it will take the oil and gas sector way forward. Now, the third point I want to look at is the insufficient regulatory and institutional framework. Before the Petroleum Industry Act was passed, we had quite a number of varying laws, regulations, We had different directives that regulated this space. And oftentimes we had clashes. We had pretty conflicting clashes. In view of the fact that Nigeria is focused on working on our ease of doing business, attracting foreign investment, the Petroleum Industry Act is expected to clean out all these issues. It's expected, of course, immediately it was signed and implemented in August 2021. It repealed the other laws that had existed before then. We expect there to be an easier operating climate. It's also a good point that Nigeria has moved 15 basis points on the ease of doing business indices. We're now 131 over 190. That's a step in the right direction. We're still looking at challenges to investment. The next I want to look at is poor infrastructure. That largely exists in the midstream and downstream sector. We need to do a lot more. Government needs to do a lot more towards improving the infrastructure, and that would greatly help in attracting investment into this space. The next is insecurity. Insecurity is a big piece. Between 2019 and 2020, we've had over 1,000 cases of pipeline vandalizations. We've had kidnappings. We've had a lot of security challenges and threats all over the country. Now, imagine you're a foreign investor and you're looking for where to place your funds to achieve maximum yield. Don't forget, foreign investors are looking for maximum yields for their funds. Would you place it in an environment that is reputed to be politically unstable? That security cannot be reasonably assured, both for the movement of goods, services, humans? It's a bit of a challenge. Even for commercial banks, even for banks here in the country, if you're asked to fund, for example, an E&P project whereby a pipeline or something is going through an area that you know to be a politically unstable area, would you be very willing to put in a lot of funds? It's highly unlikely. Now, the next challenge I want to also look at is COVID. The COVID-19, it came with a lot of issues. Demand issues, demand fell, there was a lot of issues with price. And don't forget, people are home, so really, they really didn't need a lot of fuel to do anything much. There was a lot of gluts, vessels had moved oil, they couldn't deliver them. There was just a lot of issues in that space. As an investor, foreign or local, would you be very willing to invest in the space then? No. So now things are getting better. The oil prices have rebounded very well, which is also a fantastic story. But have we gotten back to that level of financing that we really need as a country? I would say no. The next thing I would want us to look at is the long-term nature of oil and gas financing. The typical oil and gas projects, particularly in the upstream, it needs long-tenured, low-cost pricing, even in the midstream and the downstream. Long-tenured, low-cost pricing. Now, when you match that with the cost of funds of, let's say, commercial banks, it's a challenge. Can they really fund it? Even with foreign organizations, how long can they give a loan? I mean, really look at how comfortable would they be operating in that space. And then when you now look at the loans being paid back, because that environment is also pretty uncertain, how much would they want to put in? Because don't forget, the aim of every investor is to get his money back. Get his money back with profit on top and yields so that he can reinvest, because he's a going concern. Unless he's a government DFI like the Bank of Industry, even then, the money has to come back. Okay, the next thing that I will look at is the poor performance of oil and gas loans. I had an interesting conversation with some gentlemen before we came in here, and I had to point out that, ironically, the bulk of the bad loans in the country are oil and gas. Over 60% of bad loans across all banks in Nigeria are oil and gas. Yes, perhaps the bulk of those loans are in trade. That's downstream, really, right? But don't forget, for an investor, an owner of funds, a person who has not a lot of resources and he needs to spread it around, do you think he will want to put it in a segment that has proven to be a bit of a challenge, and he'll look for a safe haven so that he could put it in? Also look at concentration. Banks also look at their concentration risk. We don't want to concentrate the rest of their funds in a place that has proved to be a bit of a challenge. The next point quickly will be aversion and capacity issues. There has been a lot of aversion from international lenders to give funds, long-term funds, to a space and also an environment that is a bit uncertain in their views. Look at it really. International lenders are moving away from pure investments in fossil fuel and they're looking at renewable energy. Nigeria is also well positioned to take advantage of that because we have the sun. This is Africa, right? So, but then is our environment that developed to move totally from fossil fuel into renewable energy? Not totally. So yes, we are doing a bit in that space, but it can't be a total flip. It's critical as a country that we are in charge of our narrative. Right now, we get the bulk of our revenue from fossil fuel, which is fine. We're looking at gas, which is cleaner energy, less carbon emissions. But we need to tell our narrative. We need to be in charge of telling our story to the point that, okay, within the next maybe 30 years, we will still harness our gas. And then again, we have a good story in gas. So we have, in Africa, if we're looking at it, we have the second largest reservoir of gas, even the first, right? And in the world, we have like 3%, if you look at what we have. So we have a good story before we can ultimately move towards renewable energy. Now, I had spoken about aversion and then capacity. Do Nigerian banks have the capacity to invest totally in oil and gas projects? Not totally, because of the kind of funds that they have. Commercial banks have short-tenured funds. The Bank of Industry is only one. We have long-tenured funds, so we can invest. Same as NCDMB. But then the question is, how much have we done? Has it been able to maximally take care of the space? I don't think so. A lot more still has been done. But what is critical is the awareness and the mindset that we need to take charge of our narrative. We need to tell our story. We need to drive what we need to drive right now, and then ultimately get to where the rest of the world, where the developed world has gotten to, and say, okay, maybe 20 years' time, we focus on renewables. That has to be our story. Thank you.
Fantastic. Thank you very much, Ehi, for giving us a complete overview of the many challenges involved in raising financing. So the next topic that we want to address is how can indigenous companies actually get better access to funding that is fit for purpose? And I'll be asking Hope Yongo to kindly address this topic for us.
But just to mention and thank you for the BI contribution on some of the issues, but now we are looking at what would be the solutions. And I think just to help, how can an indigenous company have access to finance, especially a proposed belt financing arrangement? My suggestion and advice is that first and foremost, I think oil and gas services company has to be fully corporatized. And let me just explain. To be fully corporatized does not mean that you have a CAC license, you have DPR license and other regulatory licenses that are needed. I think you need to have a good corporate governance structure that will help in the issue of your professional relationship. And in that means you have to have strong adherence to extant policies and rules with regard to your operations in the industry and as is required. Secondly, I think my suggestion is that businesses have to have a rating framework. Let them be onboarded to some kind of rating framework. And let me just give an example. Maybe you are dealing with a Mobil or ExxonMobil or Chevron, which are American companies. It is expected that you have a Dun & Bradstreet rating. So these are some of the things that will help. And in doing that, because that third-party rating has a way that can give information on your creditworthiness, what are your risk profile, and what are your financial strengths, because these are they can be deal breakers because as you apply or pitch for a job, industries or companies that will be analyzing you will also be using such third-party information that will help in rating you for to qualify for the job that you are going for. And one of the suggestions that I also want to make, just like the DOI raised the issue of how the challenges are there, but we have associations. Thank God the central bank has just issued guidelines for private companies' credit guarantee framework. Can association now have a mutual guarantee framework, whereby some of those that are small companies can now leverage those mutual guarantees framework and access funding? And I think also BOI, even Nexon, I think while we are also looking at how to learn, and I think as DFIs, we should now go back to the traditional mode where DFIs now should be giving guarantees. And I think we are guilty, both BOI and Nexon are guilty on that. Because in giving guarantee, you enhance the credit of an oil and gas company or services company to access funding from any of the commercial bank or funding companies or suppliers that can provide such funding. Another suggestion that I may give, and I think, is that oil and services companies should have and obtain relevant certification. Like now, if you are into service provision, are you ISO certified? If you are a manufacturer, does your platform for manufacturing meet the manufacturing certification? If you are a lab, does it meet the minimum requirement for a lab to operate? These are some of the things that most of your employers will be looking at in the context of mitigating reputational leads that will come about with your engagement.
Thank you very much, Hope, for giving us those ideas about how people can go after funding. The next topic we would like to address is that of the different growth curves in energy transition around the world and how that affects the ability of Nigerian companies to access funding. And Oladuni will be addressing that topic for us. Thank you.
I'm talking about energy transition, and I'm going to actually take the conversation from what BOI mentioned. She said we need to be in charge of our own narrative, and that's the major message. The West had decided that, or the West had come up with research results that shows that we need to transit from the current fossil fuel energy to renewables. However, what we see with some other nations is they are owning their own narrative. So Japan is decided, okay, I may not have sun, or even if I have sun, I don't want to go sun. I want to go hydrogen. Some countries are talking about keeping the carbon, which is the main issue, which is the main crux, keeping the carbon on the ground and putting in some technologies whereby you can still access your oil and then you keep the carbon on the ground. So we need to, number one, look inwards. So it's a case of what we are looking for in Sokoto is right inside, the pockets of our Sokoto, So we need to start, I'm sorry I have to put it that way. We need to really start looking inwards. We don't necessarily have to copy everything from the West, hook, line, and sinker. It's not going to work. We have a peculiar story. Let me just give us a synopsis of what I mean by that. Currently in Nigeria, subsidy is going off and union is going to start fighting any moment from now. But before then, $13 billion on a yearly basis is used to subsidize imported PMS, imported AGO, imported DPK, imported everything. And we also need to understand that crude oil is not just about energy. Crude oil is about clothes. Crude oil is about fertilizer. Crude oil is about petrochemical. Crude oil is about pharmaceuticals. Crude oil is about asphalt. Crude oil is about our roads. Most of our roads are not even developed. Crude oil, the bitumen that is used for crude oil is, used to tar the road, is from crude oil. So we need to be able to define our own story and narrative. We don't have to copy the West, hook, line, and sinker. And then with that, we can then reduce the capital flight and start looking inwards. The money we are going out to look for is actually within here. Because if I'm paying $13 billion on a yearly basis for subsidy or whatever it is to import PMS, and I'm 5th largest oil and gas producing nation in the world, it doesn't add up. Look at what China is doing. China is saying, West, be saying your own. We want to tap into this. Japan went and discovered water, and they are planning how to bring out the oxygen out of the water and start driving with water. So what it means is the Elon Musk electric car, very soon we even go moribund. So we need to define our own narrative. That is the starting point.
Fantastic. Thank you very much for that. Thank you so much. Maybe we have saved the best for last, since we are now going to hear about all of the incentives that are in place for people who are seeking financing. And that we're going to hear from Isaac Yala of NCDMB.
On this question around incentives, I think what I'll do first and foremost is to look at where we're coming from an NCDMB perspective. The Chief Executive laid out yesterday our 10-year strategic plan, in which we had 5 pillars and then 4 enablers. Enabler number 2 or 3, which has to do with enabling business environment, addresses a lot around this, and also the funding pillar. These 2 items very much address areas of incentives. And part of what NCDMB has done over the years as part of its strategic plan is to set up things like the NOGA parks, the industrial parks. In these industrial parks, yesterday the Chief Executive laid out that 2 of these parks will be in full operations by the year 2020-22. That is Bayelsa, as well as the park in Cross River, Odukwane in Cross River State. And these parks, are set up to incubate manufacturing. And in that process, there's going to be a lot of incentives. I think I want to take a leaf from an incentive experience that I had while I was still in the bank, which is going to be very similar to the kind of incentives we're going to apply in India. Because these parks are going to be gas-fired, a whole lot of facilities are going to be there. So part of what we'll do to encourage investors, to come use these parks, is because it's going to provide cheaper cost of doing business. And that is what we see when you have an industrial park of this nature. We are trying to incubate manufacturing in these places so that we will be able to help indigenous companies and even those that have relationships with OEMs abroad to bring in some bit of manufacturing in here. In that we're trying to reduce the kind of cost. From an NCDMB's perspective, what we will do in addition to that is some things like providing gas-fired power in the environment or in the location itself. That in a way is going to reduce cost of doing business for the operators that are going to come in there. Another thing I'd like to mention here is part of what we have done with our NCIF fund. A lot has been spoken here about how funding can be provided to indigenous companies. And I think the industry needs to learn from what NCDMB has done also, because during the COVID, part of what we did with our partners, development partners, was to look at, since the price of oil has gone down, a lot of force majeure issues were coming up, repayment of facilities was becoming a problem for most of these indigenous companies. What we did clearly was to sit with our development partners to review our credit policy, our lending policy, where we brought interest rate from 8% where it was to about 6%. That allowed for about a 2% differential. Also, in cases where we had moratorium, we also extended moratorium in some of the product lines by 6 months and also in some by almost 12 months. That way, those incentives have always kept some of these indigenous companies, going and also doing their businesses, because it was very critical at that point in time to look at those kind of things, because we're looking at it from a profit perspective, but to see how we can grow the businesses of our indigenous companies. Part of the incentive regimes we have also put in place, which has to do with our participation in providing equity and debt capital to most of the Nigerian indigenous companies. We talked about the Walter Smith, we talked about the ES mentioned yesterday, 2 more refineries will be launched by next year and all of that. When we get into this kind of debt and equity participation with some of these companies, some of the incentives they enjoy as a result of that is based on the fact that NCDB is involved. Some of these importations that have been done, or some of these fabrications that could have been done, for instance, maybe the refineries and all of that, when it gets to the ports, NCDB tries to play a role, to get some level of cheaper waiver, for some of these entities to come in, so that it will reduce the cost of getting these companies to start off very well and all of that. So that has gone a long way to provide the necessary support in terms of incentives to many of these indigenous companies. Also, the Project 100, is also a program that is defined around providing incentives, for Nigerian local companies to do business in a better environment. Come to think about it, funding is very, very expensive right now in Nigeria, based on the fact that part of the stakeholders in this equation, which I would have even said going forward, maybe next session, which must call DMG, should also look at how we will bring the commercial banks to also speak on the other side, because it brings us to the point where if we're really going to have a better incentive regime, then we'll have to look at what I call collaboration financing schemes that needs to be put in place. We must begin to localize how we create funding baskets to be able to support our local and indigenous companies. We must do that because looking at the energy transition, which has been spoken far and wide in here, many of these multilateral fundings that we expect might not come cheap the way we expect them. So we must begin to look inwardly, and begin to design products that will fit into our own operating environment. And the collaboration financing scheme that I'm looking at is NCDMB has been there. It doesn't stop any operator also to bring in funding. It doesn't stop the commercial banks to bring in funding into this common funding basket. So we'll be able to create the necessary incentives to be able to deal with a lot that is happening in this industry. Yes, we understand that this is a very much huge capital intensive project, the oil and gas space. But at the same time, if you look at what had happened in the last 6 months, for instance, looking at the commercial banks, half-year profit, the commercial banks declared over 500 billion in naira, which means that in their 12 months, they probably might be declaring over 1 trillion naira in profit. If you translate that to dollar terms, that is almost $2.5 billion in 1 year from 14 commercial banks. That is one. Two, if you look at the spread of this income, you find out that over 60% of these incomes came in from fees that they made from most of these indigenous contractors. So the question before us is, why can't we have them to play a role when we want to look at cheap funding and how to create the necessary incentives to grow Nigerian businesses? So I think it's very, very paramount, and it's very important that while we try to address this issue of incentives, the issue of funding around us, we must also bring those point of sale stakeholders who interact first with the indigenous companies to also come in here and then tell us how they can help support this kind of collaboration fund financing scheme that we need to put in place. Because without that, it's going to be very, very difficult, because funding is going to be quite expensive, and we won't be able to get our companies to be able to get the necessary incentives and the kind of funding product lines that we'll expect. Thank you very much.
Thank you very much. So the first round of, interventions have come from all of the panelists addressing specific topics. But we know that they all have a lot of ideas about a number of things, and we're just going to go around one more time for them to be able to respond to emerging themes and things which are particularly burning on their chest, which they might like to get off. So I just want us to go around very quickly to allow the panelists add to what they have said based on the conversation so far, and then we'll allow plenty of time for questions and answers. Let me go first again to Ehi.
Thank you very much. So while it's important not to narrow the net concerning where financing could come from, I think that the first thing I would want to emphasize for businesses, indigenous businesses looking for financing, is equity. If whenever a person has a business idea, if you believe in it, you should have enough skin in the game. That also tells everyone else that you actually believe in that business, you know it's going to succeed, and that you're throwing your all behind it. At times you have some proposals come in, and particularly for startups, and when you ask them, so what have you put in it? They say, no, but that's why we have come to you, so that you would, right? Doesn't work like that. It actually shows, and it's actually a measure of your level of confidence in that business idea, skin in the game. So when you're done with equity, then you come into debt. And in the debt space, not only debt, there are also grants. There are lots of grants available. So it's more of widening your net. Even when you're looking at grants, de-risking is a key piece, particularly if your sector is a bit challenged. If you can get some de-risking funds, it actually helps. Because what that means is that you could put other funds on top of it. So it's more like a building block. Right? You have something on that, then you can put something else on top of it. So if you have an institution that has de-risking funds, I know these are available really in DFIs, development finance institutions. And that's also because of how they are set up. They have development mandates. They are not profit-driven. So really the conversation is much easier. Investment for debt in your business, it starts from you and how you project. So in essence, you are your story, tell your story. You need to project it, and then every other thing falls in. Thank you.
Absolutely.
Thank you.
Thank you very much for that. Yes. So Hope, do you have any other, any additional thoughts you would like to share with us?
Yes, thank you very much. And I think just to add to the mix of the financing options, I think we have to look at ways of providing innovative and creative instruments. And one of the things that we'll be doing, we've been concentrating on DFIs and banks. Why don't we look at non-bank financial institutions? And that's why NextZoom is promoting the factoring bill. Central Bank is already working on that guidelines, and I think with that guidelines, we'll begin to see factoring. And factoring is a bigger market than most of the credit market that we have, especially we're even seeing what is happening in South Africa that contributes 98% of the factoring business in Africa. They are talking about having 3 billion euro of factoring transactions. And Nigeria, from the analysis of only 40 companies in the listed the stock exchange, show that they can have a factoring transaction of over 4 trillion naira. So it's a big market, and I think that's an option that we can look at.
Thank you very much for that. That's very helpful. On the issue of receivables financing, I know that is something that NCDMB is already looking at, and in some ways has already started. It's now just a question to then scale up from there. But so we'll go back to Owo for her additional comments.
Okay, so as I was saying, we need to move away from that mentality of suffering in the midst of so much plenty in the nation. So we need to define our own mix. So rather than just talking energy transition, let's start talking energy mix. So how much of wind do we want? How much of sun? We've got a lot of sun. How much of sun do we want? How much of oil do we still want? How much of gas do we want? So that the international community will not see us as rebels, So, but we need to be clear about what it is and then, work towards that. So, and to be able to achieve that, we need to have, and I think also NCDMB can also help us to drive an integrated industry. Because over the years, the focus had been majorly on upstream. We keep looking at the $150 per barrel, $50 per barrel, $30 per barrel we're going to use to sell our crude. And then everything that the crude can bring out, we rebuy back. We did an analysis, we did a research and analysis, and we discovered as at the time when crude oil was $50 per barrel. And we decided to put numbers to the amount of the imports back into the country after the crude oil is being refined. So the per barrel $50, by the time it's coming back to us in form of clothes, in form of fertilizer, in form of petrochemicals and all those things, is actually about $2,500. So that is the kind of money we have been leaving on the table. So we are not looking for money anywhere. And then if we still insist that we want to then start attracting international investment into the nation, it's very easy. Let's maximize our oil and gas free trade zone. They are there. However, this time around, we are not coming to tell them, come and do our E&P for us. Let's tell them, let me pick a product, for instance, bitumen. The last drop of bitumen used in this nation is all imported just by 3 organizations, Total, Puma Energy, that bought Wabeco, and one other private company like that. All the roads, currently in Nigeria, we still have about 70% of our roads are still not fixed. The rural areas aren't fixed, only very few roads, and even the ones that are fixed, I don't know, they wait for the potholes to build up, and we are a rainforest, so every now and then the road gets spoiled. So picking bitumen, for instance, I'm sure if I put a deal out there on Wall Street, and I said and asked for a $5 billion, for instance, to build a refinery that would just be churning out, let's say, bitumen for me, by virtue of the technologies. Russia has that technology, by the way, where they would just focus on the heavy crude, and then they just bring out all those byproducts, the cokes and all that. I don't want to go PMS. I don't even want to go AGO at all. I just want to do bitumen. I want to do asphalt, and just ensure Nigeria no longer imports bitumen into this nation. Just think about that. I will get the whole of Wall Street looking for that deal. Then tell them I have a free trade zone where they don't have to even pay tax. So one thing we probably need to do is the industry needs to be more integrated. Free trade zone oil and gas sits with industry, trade and investments. I'm not sure they are not here. I'm not sure there is that proper integration between the two bodies. So we might probably consider even moving that unit or that section into the Ministry of Petroleum Resources or under NNPC or somewhere, or find a way such that there is a synergy. Because they are doing their own, we are doing our own. But that is a channel we can use to invite investment. They will come. If you say, E&P will handle by ourselves, but come and do bitumen for me. Investment will come. Come and do fertilizer for me. It's only Notoria, maybe one other one. Okay, Dangote has started producing fertilizer too. Notoria and Dangote, the fertilizer that will feed the whole of 200 million people. So we have the volume, we have the population, we have everything it takes to just domestic, such that we'll now start exporting. Let's maximize abstract. Let's start exporting to West African countries. And these things are doable. Let's, number one, refine more. Thank God for the modular solutions now. 18 months you can decide to refine. Jet A1, do you know how much we fly in Nigeria? How much we fly, how many planes fly into this country? All the Jet A1s we use in this country are imported. Beside Muitala Mohammed Airport, there we have land. Let's just put a 10,000 barrel modular refinery there. That will just be churning out distillates, AGO and HHK. AGO and DPK, dual purpose kerosene. We are trying to get women to stop using kerosene and start using gas. Or you can even just bring out the propane, the butane, and then the distillate. And you just put it there, and the focus is for you to be able to just fuel all your jets and all the international jets. We have very few jets in Nigeria. All the international jets that are flying into Nigeria, make it mandatory for them to buy our Jet A1. And then the refinery is just right there beside them. Those are the kind of things these Americans do, so we just need to start thinking out of the box, think integration.
Thank you very much. I like the energy that Owo has brought to this conversation, and the fact that some of the projects that she's suggesting that she can even maybe take FID within the next few months. There are many contractors here that will be lining up behind you. So please, as you are moving on all these, your refineries and so on.
Oga Simbi is here to make it happen.
Super, we're behind you. Thank you very much for that. Just before we go to question and answer, we still have a few minutes. Isaac.
Yes, thanks, Austin. I want to also comment on the challenges that has to do with funding. If you take a statistic of indigenous companies today and you put a questionnaire to them to say what are the critical challenges, we've laid out a couple of them in here. They will tell you two key challenges. One has to do with pricing, which has to do with high interest rates. And one of the second challenge they are all facing has to do with the non-flexibility of tenure and all of that, mostly because the point of contact or one of the stakeholders in which they deal relevantly with is a commercial bank, and most of them, they like to have high interest rate in here, and also they are not very flexible in their tenure. Now, in the entire value chain in respect to what we're talking about in here, from the development bank, from the DFIDs, and also from what NCDMB is trying to do, when we pull our funds into an investment basket, what we try to do is we get into some level of agreement where we try to put interest rate regime, very strict interest rate regime, to say, well, we want single-digit interest rate on this facility and all of that. But however, at the point of disbursement, when it gets to the other side of it, sometimes the funds probably might be a lot much more expensive. And that brings us to what's part of what Yongo was also mentioning. How do we develop new funding instruments, to be able to support these indigenous contractors? And also, it brings me to the point I raised in here, where I said we must also bring the other stakeholders, which are the commercial bank, into this equation when we're discussing how do we fund or how do we access cheap funds for most of our indigenous contractors, because we should have them in here so that we collectively will be able to develop the next level of funding instruments that would be purpose-fit for the growing Nigerian content. In addition to that, I also talked about the collaborating funding scheme, which I felt should be one way in which we can use in addressing providing cheap funds or access to better ways of funding to indigenous companies. We shouldn't forget the fact that we can create this kind of funding basket, by also bringing in investor equity. We can also look at the multilateral agencies, how we can pull them into this basket, even the commercial banks, government grants, and other arrangements that can come into this, so that we can deliberately, create this kind of funding schemes that can focus on helping our indigenous companies to grow. Thank you very much.
I think we have enough time to take on some questions.
I agree completely. There is need for more creative financing instruments to support indigenous companies, because the pressure coming from international financial organizations is real. Fossil fuel investments are continuously being derated, and the consequence of that is that with what happened in COP26, there is a club set up of financiers, international financiers, that have set out on continuous campaign against fossil fuel investment. So relying on Nigerian banks, commercial banks, might not be yielding any result or fruitful, because they are fixated on interest. Even insurance companies will fail us because they are going to chicken out. Pension fund will not be there because they are looking for de-risked investments. So these are very terrible signs. So where do we go? In August or September, NCDMB hosted African Local Content Roundtable here. And the Executive Secretary proposed for Apple members to consider to set up African Local Content Fund. I'm sure that Apple has not dropped the ball on that. I would think that Apple should take the initiative to begin to engage FDIs like Bank of Industry, Nixon Bank, Afrexim Bank, to begin to forge stronger collaboration, and if possible, touch base with Sovereign Wealth Fund. That's my submission. Thank you.
Whilst I do agree with the immediate past speaker, I just want to make a comment, actually. I don't think we can completely ignore what happened in COP26. And there are grants, there are possible investors that I think Nigerian companies, even the oil and gas companies, can tap into, because they're not saying the oil and gas actions should stop immediately. Basically, what I understood them saying is that we should start working towards a reduction of carbon footprints. And I think that in doing that, particularly as we consider policies coming out of the PIA Act, and then looking at His Excellency Mohammed Buhari's commitment to the energy transition, I actually believe that, I hope people from the National Assembly will be listening and all of that, and as we come up with policies, as we go further, Nigerian companies can benefit from the projects that are going to come out of carbon footprints reduction. But the only way that can happen is if people like NCDMB and the NNPC and all of that, in coming up with their policies, begin now to ensure that certain actions are put in place that will favor us.
Listening to the panelists from this conference, there have been issues. Yesterday, the representative of the GED upstream was talking about upstream funding being long-term funding. And as we know, over 95% of businesses in Nigeria are SMEs. And these SMEs often, particularly for us women, most of our businesses, not many women are playing in the big business arena. And we know that the oil and gas sector has very high barriers to entry, largely because of the funding requirement to play in the industry. So I'd like our speakers, particularly the Apple representative, the Bank of Industry, in terms of this funding, you talked about development funding. I'd like you to share more light on that, please, how the oil and gas can participate in this development funding, because this industry there seems to be a disconnect between this industry and the development sector. So how might companies position for that? And then how can oil and the industry, these SMEs that are playing, how can we leverage on the African Continental Free Trade Agreement?
Okay, thank you so much for the question. Igogo as financial institution, the development financial institution, the reform of Apple happened in January 2019. And just after this reform, we started a process of equity rising from member country first. So member countries, there are 14. Some started making commitment, like Nigeria, for example. Nigeria committed, and they are also about to pay their share. So, but this COVID-19 arise, so it delayed the process of operationalizing the institution. Now we are working strongly. We signed last year in December a cooperation agreement with Afreximbank, so that we work together in terms of co-investment, co-financing, and you talk also about continental trade, and we are working closely with Afreximbank so that before the end of the, how do you say that, before the start of the third quarter of 2022, we'll get requests from African company, as you mentioned, for example. And also, even yesterday, I was discussing with African Energy Chamber, because in Cape Town, 2 weeks ago, I think, we had a very, very profitable meeting with a national oil company of Africa. And we are planning a very good meeting, maybe in January or February, so that we work together to define some strategy in terms of developing, and the role of Africa, of ICOP, will now be to bring on the same table all the players in terms of financing. So international financial institutions, some commercial bank, big like those who are in Nigeria, and we start all those negotiations earlier in 2022. So just we have to wait for some months, and I think you will see the good part of our work.
Thank you very much. Thank you very much for that intervention. Yeah. And I think that your words of hope and patience are words that we will hold on to. So don't worry, we'll be knocking on your door very soon to come and look for this money.
Thank you.
Thank you. So we'll give the last word to Ebehi, who is here with us and already has plenty of money. So it's not just a question of hope and patience. It's a question of how do we collect this money from you.
Thank you very much. Also, thank you very much for the comments, particularly the first comment that the gentleman made. Bank of Industry. So perhaps I should backtrack a bit to give some perspective around my response. Bank of Industry is over 60 years old. It's Nigeria's oldest and most successful DFI. It's a result of several mergers of DFIs in Nigeria. Bank of Industry has a group dedicated to oil and gas. We also have a group to renewable energy, also dedicated to renewable energy. The oil and gas group is less than 5 years old. So you might ask yourself, why did Bank of Industry just establish an oil and gas group since they are that old? It's because of the local content focus. The fact that, so Nigeria gets the bulk of its revenue from oil and gas, but the majors are IOCs. So the question was, where are the Nigerians? And that's why that group was set up. We have disbursed billions of naira to oil and gas, which was, so our trajectory really was what encouraged NCDM to have the conversation with us, and that resulted in the NCI fund being domiciled with us, and then the trajectory that you can also see in the NCI fund. So we have disbursed a lot in that space. We have developmental funds, which we have deployed towards oil and gas. We still are. Some of our customers are in this room. I won't call their names. Thank you. We have given them several facilities. We are particularly interested in gas. Ironically, we've done a lot in gas, but nothing wrong with oil. We are also very interested in oil. And what we are clear on is our mandate. We are clear on our mandate. Our mandate is industrial developmental focus. So if customers come with things like short tenure transactions, trade, those go to commercial banks. But what we deal in our niche is providing long-term financing. It goes up to 7-8 years financing. Our pricing, 10%. At times it comes down below to single-digit pricing, depending on the pool of funds that we have available for that particular product at that point in time. So we are here, we have the financing. You don't need to meet the MD, even me. You didn't have to even have met me. Just apply, come in. If you have a good deal, a well-packaged deal that you believe in, don't forget, your skin in the game, you won't have a problem. Thank you.
Thank you very much for those words of better than hope. We have been told that all we need to do is follow the process, get organized ourselves, and there's money waiting for us. So nobody has any more excuse as to not having sufficient funding for their projects. And with that, I would just like to say thank you to all of the panelists for giving us such a rich and lively conversation, especially the energy from our ladies who have in some ways put the men to shame today, but that's not unusual. So thank you very much to all of you, those who've also logged in remotely. And with that, this is the end of this panel. Thank you very much.
I hope you got some valuable insights from the conversations. I'm Ehi-Omoike. Until next time, bye for now.